Good afternoon, everybody, or good morning if you're in WA. I hope you're all well today. Welcome to your live market watch session, as is usual on a Thursday, on what's been an interesting week in markets and is likely to get more so over the next couple of days. If you can just let me know you're hearing me and seeing me okay, that would be fantastic. Typing questions. Good day, Shane. Thank you. Cheers, Johnson. Thanks, Stephen. Yeah, cheers, Ross. Hey, Chris. Michael, let's see how you go, buddy. Good day, Peter. Okay, hey, John. Good to see you here, mate. Thanks, Rachel. That's awesome. Okay, let's get things kicked off. And of course, just a reminder that this is a session delivered by me with my opinions and not necessarily representative of Go Markets. We are looking at live markets, so please bear in mind that this is for educational purposes only. Nothing that you see or hear should be taken as direct advice to take trading action. You've got trading plans and stuff in place that'll be your guiding light to do that. And of course, risk management is a key part of everything we do. Good day, Josh. Good to see you here, mate. With that being said, let's look at what's come across the news. Overnight, US markets, a really choppy session. Started off good, dropped off, ended up in the positive again. So a really choppy session. Really, it's because we've got some big data coming out over the next couple of days. Obviously, yesterday, ASX hit record highs, breaking that 7,200 level, which is vitally important. And we had some follow through on that today, of course. Asian markets generally cautiously positive, with the exception of the ASX, which is bounding up. At least it last was when I looked. The US dollar index is trading slightly down or down, depending on how you want to read that. After testing resistance, we'll have a look at charts of that as well. And precious metals continue to trade around key levels. Oil popped up. Last time we met, we talked about the OPEC meeting on Tuesday. Popped up on subsequent to that over. So Brent is trading over $70. I some follow through yesterday. So let's see what that's doing right now. FX majors are irritatingly range bound, particularly on the long-term charts, and getting more so on the short term. And some of the miners are as well. We'll have a look at that in a second. The next couple of days should be the deal breaker. We've got big data day today with some Australian trade balance retail sales numbers kicking around, and also we've got global services PMI due, which is important. Not normally as important as the manufacturing data, but because obviously the services were hit hardest through COVID, we've got that's going to sort of be interesting. And then, of course, we've got US jobs data. Now, normally we would have got the ADP report yesterday on a Wednesday. It normally comes out the first week of the month. And is seen as a precursor to tomorrow's monthly non-farm payrolls, which, of course, is the mother of all data points in the month. Tends to move markets significantly. But, of course, because of the public holiday in the US on Monday, that's been pushed back. So tonight we've got the ADP and the weekly jobs number. That's going to be the highlight for today. Let's just have a look at some things around that. Let's look at the futures first of all. These are creeping up nicely during the course of the morning. If we look at FX, it's all pretty flat there. We are getting a little pressure to the downside for the Kiwi. US dollar slightly up. Gold and silver are having a better day than yesterday. We are holding on to 1900 with gold. Silver dropped off, but it's moved back towards resistance. We'll have a look at those in a moment, and you can see Brent is continuing. Brent and WTI is nearly at 70 now. That's continuing its merry way higher. Just again to put this into context, I'm just going to quickly pop this up on let's pop it on a weekly chart so you can see where it is. And so you can see there that we're really at highs we haven't seen since really since the beginning of in fact really since the beginning of last year. So we're at pre-pandemic levels and arguably the highest level for 2 years. We can see here that last time it was here was interesting around about May or June 2019. So undoubtedly it's a popular place to be right now. So on the economic data front, let's just do a quick refresh. So you can see the figures that have come in now. The Australia's trade balance numbers are better than expected. That's going to be positive. Retail sales came in as expected and as they were last month. And again, that's not bad news because of that, because of the inflation concerns. Obviously, that's very much under control. You can see the PMI data, the services PMI data that came out of China is slightly less than last month. They rarely do a prediction, simply because it's harder to get information, but you'll see later on today, we've got all these services PMI numbers coming out of Germany, of the Eurozone as a whole, the UK, and then we move into the big data. So we do get services PMI coming out of the US, but then we get the ADP employment change, and of course, weekly jobs are more important than they usually are. We are expecting a fairly flat number for both, really. So economists have predicted that we may get a little bit of a tail off to that, to what's been happening of late. So if we do get any move higher in that, that'll be seen as very positive for the markets, and may well push us above the record highs we hit on the S&P 500. If we look at what's happening in Asia, you can see that the ASX is outperforming. Nikkei is doing okay. China's pretty neutral, and KOSPI is doing well as well on the back of the Nasdaq doing okay. So that's where it all sits for right now, and just close some things down. Let's have a look at some charts, eh? So look at the US 500 daily. You can see there we have been range bound in quite a tight range over the last week. Part of that is really a lack of there's a lack of headwind or tailwind evidence, but we're going to get some movement on that going forward. In today's session, quick look at the ASX. You can see there's the break of 7,200 yesterday, off our highs of today, so just pull back a little bit. So maybe a little bit of caution, a little bit of short-term profit takings coming, because we've had a very good run on the ASX over the last couple of weeks, and that's served us well. If we look at, we should really look at the US dollar index. Let's drag that on first, just to put currency movements in perspective. There's the US dollar index daily, and we can see we're trading in between that range still of around about just over 90 to the upside and down towards about this 89.65 that we've talked about before to the downside, but very much range bound. Of course, we're seeing that across all of the US pairs, i.e. the majors. Let's look at what's happening to gold and silver. If we look at gold, 1900 is the key level, so we're slightly above that as we speak on this futures contract. And if we look at silver, we've moved back higher today, pretty neutral on yesterday's close, but you can see we pushed right back up to resistance at 28.12. So really, again, need some more information to move it higher. If we do get equities moving higher in the US, potentially testing those record highs, then we could see, or we're likely to see US dollar weakness down at the bottom of that range that it's in, and hence we may see gold and silver pop through. Quick look at oil. There's oil trading towards the top of the session in Asia, up nearly at 72. Now remember, we talked about $5 increments in terms of how oil trades, so it wouldn't surprise us to see this up around about this 95 level over the next couple of weeks. That's probably pretty much on the cards. If we look at cryptos, going nowhere. You can see it's triangular. classic textbook symmetrical triangle on this. If we look at the tops or if we look at the highs and the lows, the reality is we're trading around this 200 MA and have no appetite, it seems, to move forward from here. So a break either way will be interesting, as is usually the case with a symmetrical triangle. Looking at the majors, I'm afraid we're not going to have much to shout home about here. We've got US dollar, Euro USD trading within a range, and right bang smack in the middle of that as we speak. We've tested it to the upside and the downside in the last couple of days, but you can see how choppy it is. We're getting a couple of days up, a couple of days down. Going nowhere makes trading long-term FX very difficult indeed. I put the US yen on a daily chart again so you can see where it's at. So we've got essentially a resistance at the moment at around 109.70. There is, if we break that, the potential possibly for a move up around about 45 pips or so. And that looks as though it could be worth keeping an eye on, particularly if we look at the hourly chart. You'd probably want it to break this 109.82, and then there's our potential profit target, which was the high we hit 4 days ago, up near those around about 33 pips up from where we are now. If we look at GB pound USD, nothing different to report. You can see it's range bound again, and likewise with the Aussie US, which has been in a trading range apart from a couple of sessions ever since beginning of April. So with no dramatic movement, unless you're really scalping and trading hard of the US dollar pairs, then what's things looking like outside of that? Well, one of the charts we did like today, and it looks as though it's breaking right now, is you can see there that last candle on the 15-minute chart is the Euro New Zealand dollar. Now, in terms of upside on this, we're probably limiting to around about 80 pips to the upside. You can see how this may well be resistance there, and also corresponds to the 200 MA. So there is a potential trade here. This is going to be our FX chart of the day. I'll just put that green line on and show you the hourly chart. So there it is. There's the move up potentially. So that's certainly worth keeping an eye on. Let's see how we finish in the next 15 minutes or so in relation to that candle. Volatility really quite low at around about 18 pips on the ATR. Looking outside that, if we see that sort of New Zealand dollar weakness, we can have a look at some other pairs against that. So maybe let's have a quick look at the this New Zealand yen. Let it just cook. Again, if we put it on the daily chart, first of all, you can see how we broke through this key level here at 79.20. But all we've done is we've really sort of worked our way back down to here. If we do get a break, then again, if we look at the daily chart, there's potentially a 60 pip drop in that. Let's check out how noisy it is by looking at the hourly chart, and you can see we haven't been down here for a little while. And when we were down here, we actually got quite a sharp move higher in terms of it hardly touched the sides on the way up. So you might want to be cautious. If we entered this, you might want to be cautious around this level, about 20 pips down. But if it breaks that, then we could see ourselves 50 pips to the downside. So again, another one worth keeping an eye on. If we look at carrying on the Kiwi theme, and why are we looking at the Kiwi? Well, I just want to take you back to the futures contract. So why are we looking at the Kiwi? Well, you can see it's the worst performer against the USD of all of the pairs. So that's why we're focusing on the Kiwi. We could have a look at the GB pound Kiwi as well, because the GB pound is actually up versus USD this morning. So you would expect that to be showing some signs of movement. And again, like the euro, is challenging a key level on the hourly chart. You can see that actually closed above that in the 195.96. It's now moved up to test this important level here. So we're going to just move this line up because we think this is important. But if we look at the upside on this, you can see how this was support before and was actually tested intraday a few days ago. But you can see here there is some noise around about 18 pips up, which is why we are planting our flag in the Euro Kiwi as the trade to watch today for an FX point of view. Okay, excuse me. As always, if there's anything you want me to have a look at, I'm more than happy to do so. I certainly can have a look at Ethereum. I'll pop that on a chart as well. Let's look at it on the daily chart. Again, looking triangular. Looking slightly better off than Bitcoin in the fact that it's significantly above its 200 MA, but we have got, and just to put, these are all in bear market territory now, but just to put this into context, they're about 37% off our highs. We have got a potential downside if we break there, around about another 16%. That I would say is the established support that's in place at around about that 2250 level. So that's the level to watch if it starts to move downwards. Looking at the Nikkei for sure, Gary. Okay, so we'll look at the daily first of all. Let it just catch up. Okay, so we would have suggested, that this was a key level last week. You can see how this was support, then we dropped below and made our way back up to it, and then we had a break to the upside. In terms of how far this could go, we're sort of testing a level at around about this 29,318. So on the daily chart, not a lot in that. On the hourly chart, you're probably quite restricted in terms of your upside potential on this. So maybe being patient until we get a 320 break would be prudent. Certainly not as strong as the ASX for right now. Quick look at the DAX as well. So again, we're going to put this on the daily chart. You can see how this is testing record highs again. Actually broke through this a couple of days ago. Not a compelling candle, but you can see how the futures are poised to maybe move higher again. There's been some reasonably good data coming out of Europe recently, and that's certainly helping the DAX. So looks as though it's about to pop even higher. Now, in terms of how far it might go, well, often what we look at, if we're in blue sky territory, which we are in the DAX, is we look to where the previous established support is. So we can see that's about 2% below. So we may expect a 2% move to the upside. So possibly to test that 31,500 level as the next key area. Okay, so let's just peek at the ASX and see where we're at. Just give me a second. Let me just do a little bit of moving and grooving. There we go. So, right. Okay, all set up, good to go. So you can see we're up 0.5% at this stage. So a nice 50 points above that 7,200 level. We have dropped off from our highs, but we're still holding where we are now and have done for the last half an hour or so. So we look okay where we're at. If we look at advances versus decliners, 124 versus 68, that looks interesting. In terms of the sectors that are doing well versus those who aren't, we're seeing some money coming back into the banks, which have been starved a little bit of attention over the last few days compared to the resource sector. We see some movement in Afterpay. If we go down to the bottom, we'll see same in Zero and in Zip, which has had a really nice bounce back over $7. So that's doing okay. One of the standouts is Worley, which is trading towards the highs of the session. We'll have a look at that in a moment, which is a really interesting chart. We've got some recovery in resources, which struggled to start with on the back of a little pullback in copper. Obviously, oil, anything energy related is doing well. So we see Oil Search up there, and we see WPL up there, nearly 3%. See TWS, TWE is still pushing higher. A little bit of weakness early on in the retail space, but we see JB Hi-Fi's got better, and I think Harvey Norman were down early on. They've made their way back to neutral, which is pretty good. And of course, CBA on the back of that bank move up, continuing to rampage above that $100. So it really is quite a broad-based rally we're seeing right now. A lot of the stocks that have not performed over the last little while are now doing okay. Just checking in on healthcare. Ramsey's doing okay. RH is doing okay. Sonic are up as well. So healthcare is doing okay. So a fairly broad-based rally to have a look at. Let's have a look at some charts. Okay, we'll start with Oz Minerals, which have had a really quite a good week. They had a big pop up yesterday on the back of a positive report. We did start down, as you see there. We're expecting it to drop off, but managed to sort of hold its own in the session today. So we're just above neutral. BHP are back up and testing, or getting pretty close to testing $50. You can see there that's looking quite interesting. $50 is a key level on this. If we do break, we could see a test of the highs we hit earlier in May. We mentioned Worley, Parsons, so we're going to have a look at those. Actually, on the way down, we're going to have a look at Wesfarmers. So you can see Wesfarmers are really struggling quite a bit today. You can see why, of course, is because we've got a resistance there at 55.16. So a little bit of a pullback today. Sorry, 56.16. So we'll pull back about $1 during trading today, and we're trading towards the lows of the session. But this has done very well over the last couple of weeks, so it's one that really is perhaps subject to a bit of profit taking, maybe some rotation out of this into some others. We'll look at LYC again, same, a bounce off this support, so looking quite strong. Now, what concerns me about LYC is this. Okay, every time we've sort of moved up, we've got a lower peak over the last 3 moves up. So this level here at 559 is really vitally important. If we do get a breakthrough that, there could be game on for that. Now, a couple of stocks that we had a look at last time. Have a look at Galaxy. So still going up, edging towards that 411 all-time high. This is a lithium play, and if we look at PLS, again doing very well and moving up to possibly test 135.5. So that's again looking pretty good to continue in. We liked Iluka a couple of days ago, and again you can see why. This is actually done okay during the day. It had a little bit of a soft start, you can see there, but it's worked its way back up. Now, why we like Iluka is we've had a nice rounded bottom, bounced off that 200 MA, possibly looking at a move, certainly to close this gap in the first instance of around about 3%, but then we could be heading towards a retest of that level we hit at the beginning of May. Now, here's the one we've been looking at today, and you can see why we're really enthused about Worley. And that just is continuing to go up during the day. Let's just put that. So there, there's an entry after that sort of first, probably about that first hour. But it continues to move up, looking very, very strong. Look at the daily chart. So a test of 1281 is very much on the card, but that's a very clear break. Some very strong trading coming into that, and with the volume quite high in that. It was an interesting candle yesterday, which sort of looked, I was a bit annoyed I didn't get in it yesterday, but it looked as though it might sort of move higher yesterday to test this 1170 level, but just smashed its way through. So now we've sort of got this in sight at around about 6% higher than we are now. So Worley is our chart of the day for today on the ASX. Let's have another look. Have a look at a couple. We said banks were doing okay. Have a look at ANZ. You can see we've essentially had a nice uptrend over the last sort of 2 or 3 weeks. A little pullback, and now we've got some buying coming back in along with the rest of the market. Just a general feel good after that GDP number yesterday. But really, 29.09 is the level to look at in terms of that as a potential entry. CSR as just get up to date on this. CSR, yeah, CSR, I don't like it. 622 maybe, but trading within it looks a horrible chart compared to some of the others that we've had a look at. Although there's a nice balance, got some pullback. Yeah, doesn't fill me full of happy joy feelings. Qantas is having a pop, and we talked about Qantas when it was around and this 200 MA. So this was our potential chart of the day as well. We were sort of flipping between this and Worley. Certainly, if we hold that move over the 200 MA, even possibly move a little bit higher, we've certainly got $5 back in sight again, which is around about 2.6%. That would be the reason that Worley is our preference. Got slightly more upside on that, but you can see there's $5. Oh, sorry, let's try that again, Mike. There's $5. That's why it's important. Was support, that was a confirmation point on that double top, and was resistance here and here and here. So $5 is important, but this is a good sign and quite surprising, really, in light of what's happening in Victoria. Any others you want me to have a look at, guys? Please feel free to type them in. Is that a clear break? Out candle, good entry, good candle to get in on. Look, Steve, if you, generally speaking, what we look for is we look for a sort of being in the top 25, 30% in the last hour. Now, of course, what I also want you to bear in mind is the big day today that we've got ahead. There is the potential for markets to move quite significantly. So just bear that in mind when position sizing and looking at how many positions you've got open. Or I've been shopped a little bit on that this week. We'll look at Zip. Although we've got a positive day today, we are under the 200 MA, and so we wouldn't be interested in this until we see a break. If we look at Afterpay, APT, now we talked about this very similar sort of picture. Let's put it on a line chart, and you'll see that if we look at this closely, you can see that really we've got a line there around about 94.50. Oops. And if we break that, then really this 200 MA is about as far as it'll go in the first instance. So around about 5.5% to the upside on Afterpay. If we break that, that's going to, if we break $100 and start to move up from there, that's going to precipitate a heap of buying. Worthwhile looking at Xero as well. All these have been under a bit of pressure of late, but you can see Xero has actually held up quite well. We hit a good high yesterday, looking positive. Is that all the data? I'm not sure it is. Hang on a second. Oh. There we go. That's better. Okay, so you've got this positive day today. Moving average is looking as though they're going to cross. So we can see our closing high from a few days ago at 132.50. That's what we'd like to see. And if that does break, then technically we could see ourselves up around about this 5.5%, 6% again. So that all looks good. It's worthwhile having a look at WPL, and simply because it's broken the 200 MA. But you can see how noisy this is around here. Let's just look at oil search as well. Again, we've got a candle that's broken the 200 MA, which again is very positive in terms of where it is for right now. If we just put this on a line chart, you'll see how much noise there is around about that level there at 405. So I think that's the limit on this for right now. But if we do get, again, if we get a break of this, we could see ourselves up around that 425, 430 level. Webjets for sure, Josh. That's a nice bounce. Again, let's let the data catch up a little bit. Let's move on in. Let's put it on the daily chart. So Webjet looks very interesting. That's very positive. Good sport, Josh. Okay, so tackled the 200-day EMA yesterday. You can see a very positive candle today. Looks like this is an important level. You can just put a line at that place there. You can see how, whoop. You can see how it's resistance here and support there. Take it back even further. You can see again resistance here. So this this level it's testing now at around about 533 looks important. In terms of upside on this, logically you would suggest that there may be a pause there, again around 5% higher, but looks okay for a little short-term kill. So you can see now why I was sort of reluctant to offer anything short. TWE was our chart of the day, Monday, I think, and you can see that today's trading is pushed it right up to that resistance. We had a little pullback, a little retracement at the start of the week, and now we're moving higher again. Actually, it was last week that TWE was, I think it was last Thursday. You can see why this is looking really interesting. Now, again, context is important. Let's take this out to see what this could mean. And this could mean a nice move higher on possibly up in the first instance around about 5% and maybe up as high as 8%. And then we're into gap filling territory. So again, TWE, if you're not in this already, is worth keeping an eye on going forward perhaps. A couple of US stocks. We talked about Zoom. Let's just get rid of some of these gazillion horizontal lines that are on Zoom. We're watching this 200 MA. We've tested twice already, so we're still waiting for a break over 333. Expected a better performance from it last night after the previous night's earnings, but it didn't come to play. So that really didn't fulfill what we were expecting at all. Just wanted to pop QCOM on this. Let's just catch up on the data. So we've got a key level here on QCOM at 133.72. So that looks interesting for a break, but again, it's one of these situations where you haven't got a massive amount of upside. It's only about 2.5–3% till we hit next level of concern. MU has been one of our favorites over the last few months, and this again is right back at a key level, just around that 411. If we put it on a line chart just to try and take out some of the noise, but it is a noisy one, we can see that maybe a 4% up move around about that 89 is interesting. Microsoft trading within, let's just pop on there, trading within a range, so I'm not interested in that. That doesn't look like a nice chart, sorry. And we were looking the other day, we looked at Caterpillar. Come to that in a moment. Just want to put BBY up. See a massive candle yesterday on the back of good news. That's put it at really sort of at a place where we could be challenging this 52 level, but that's a very sort of tricky candle to know what to play with. No, it's not what I was looking for. Caterpillar. So here's Caterpillar. We talked about this again. We're still stuck here at around about 244 as the resistance level. Beyond Meat. Now, we do like this. This is our US chart of the day. So this is a vegetarian-based food company, maybe because of all the meat issues going on, the hack there. So we broke through the 200 MA. We came back to retest it, and we had another move higher yesterday. This was the highest close we've had since the beginning of March. And so this looks to be shaping up nicely. In terms of where this could go, suggests that that potentially is the next key level of interest, so around about 9% up. So Beyond Meat, BYND, is our US CFD chart of the day. Okay, guys, I think I've answered a lot of what you've put up there along the way. Just quickly looking through. Yeah, sure, Shane. We'll look at Flight Centre. FLT. So underperforming Webjet, but nevertheless, actually they're not underperforming Webjet. That's actually not a bad chart either. Let's just take you back a little bit just to get context here. It again looks like an important level. The only issue with this perhaps is the close proximity of around about 3% of that 200 MA. But again, if we break through that, we could see ourselves bound back up towards $20. Covered Zoom for Josh. Just a like. Yeah, ILU. We did mention ILU. We like ILU where it's at. It's actually recovered quite well today after certainly yesterday was a very positive candle. We like the bounce it's had off 750, that breakout candle yesterday. So it could have potentially dropped off, but you see how it's really sort of done quite well in terms of this is where it gapped down to. But since then, we've had a gradual move higher. So if in this already, then absolutely stay in. If not in this already, the upside potential is now around about maybe 2.5%. So probably too late to enter now. A50 will be the next entry level. AMI, I'm not sure. AMI, obviously AMI have gone mental. I don't think we haven't got on this, but we'll do that. We'll have a look at obviously this has been one of the all the recipients of lots of Reddit. Are we talking AMI in the NYSE? I'm guessing. NYSE, AMI. This absolutely got. Oh, what's it doing? Okay. Hey, let's try again. AMI, NYSE share price. Okay, there we go. So you can see this is insane. Okay, that's one day, it's up 95%. So that was on the back of the Reddit traders, the retail traders trying to get one over on the hedge funds. Just to put it into context, these are 6-month chart. So wow. Now it's up 8% in after hours trading, but this could change to be 30-40% down pre-market. So just quite surreal in terms of, and quite look, amuses the hell out of me, I must admit, in terms of how these guys are trying to do the hedge funds. But yeah, that's it doesn't get much more interesting than that, of course, unless you're into GameStop, which again is quite surreal, up 13% again. This has been the subject of a major rally, so up $100 since in the last month. Okay, so what's that, about a 40% increase or so. Great stuff. All good. Right, I think I've probably answered what you asked. Well, I hope that's useful. Just a couple of things coming up that you might be interested in. Just do a quick recheck of what the ASX is doing. Just do a refresh. And the futures, I just want to quickly. So see, the futures are not moving very much. We can see the Kiwi is continuing to look weak. So outside of that, there's not a great deal. Okay, so for those of you who are interested in share CFDs, there's a share CFD clinic on Tuesday. You're very welcome to join that. I'm going to put the link for that in chat. I spoke to Ilan this morning. A little bit of miscommunication in terms of which date he was supposed to come along, so apologies for that. He will be rocking up next week to do his thing, but I hope last night was still okay. Covered some good stuff and seemed to get some good feedback. So that's what's coming up. And a quick refresh of the ASX. We see that we are sort of dropping off a little bit in terms of where we are previously. So be cautious. I suspect we may see this drift downwards. Certainly not bound up from where it is now, just simply because of the A, record high, and B, all that data that's out later. So in the meantime, guys, trade safe. Look forward to seeing you soon. Have a great weekend. Cheers, Michael. Thanks, David. We'll catch you very soon. And Stephen, we can do that tomorrow if that's okay. Today's a bit stuffed. Or the weekend is fine. Let me know what works. Cheers, Ewan. All good, Gigi, Rachel, Ross. Take care of yourselves. Hey, have a great weekend if I don't talk to you before. Bye-bye for now.